I had the pleasure of meeting these three gentlemen. I've known them, a few of them before, and we had a conversation about half an hour ago, and I was blown away by their cleverness and intelligence. So I think for the next 30 minutes, you're going to get a lot of insights. Not all of it's going to be positive. Some of it may be saying, hey, this isn't what I expected, but it is going to be informative. On my immediate left is Ilja. Ilja has asked me not to pronounce his last name, and I thank him for that. He's at Access Auto, which is a subprime lender. Beside Ilja is Evan Chrapko. He's at Trust Science. Trust Science is actually, I'm going to say the most interesting, so I'm going to apologize to Ilja and Charles. They're a mixture of a credit bureau and a credit decisioner at the same time. So it's it's an entity that is expanding. And then on my far left is Charles Perron. Charles is also a subprime lender, one of the largest, and prime lender, one of the largest in Canada, non-OEM or captive based. The three of them are going to, answer questions. I've asked them to disagree with each other, because I think the most interesting part of a panel is not groupthink, but how each person envisions the world slightly differently. And so I'm going to start with, and we have 28 minutes for three really clever people talking, so good luck to us, but we'll see how far we can get down the questions. The first one we were going to ask is, how has the innovation streamlined the processes that you've seen in your business? I'm going to start this with Evan, because it starts focusing in the decision and then moves into the other areas.
Sure, thanks Jonathan, and thank you everybody for your attention. The innovation primarily that you've been reading about the last number of years is AI, and the last couple of weeks or months is generative AI. The way it's changed the business, in our case it is the business. I was saying that to my co-panelists, we got this going many years ago before AI was widely recognized, and I took a lot of ribbing around whether or not I was building Terminator robots. So the meetings devolved into joking around about HAL and Skynet and so on. But the tough thing is operationalizing a lot of what was academic theory 45 years ago, not economical until computing horsepower and data transmission and storage became cheaper. So the big revolution has been making this accessible in the real world to real decision makers like each of the guys on either side of me here. That's not trivial, and it requires paying attention to laws and regulations. So Jonathan's stock and trade, you don't do finance in either the US or Canada and just move fast and break things, the way they like to say it in Silicon Valley. You do that, you move fast, break things, and then the next step is go to jail. And so also as someone legally trained, Trust Science is extraordinarily tight with all things having to do with compliance, including, I'll take exception with a statement made in one of the beginning panels, there aren't 3 credit bureaus in Canada now, TransUnion and Equifax, of course. Trust Science is one of them, registered as a bureau in all provinces that require such a registration. There are others who are in one or another province, but this is not something that you do by yourself at home. This is many years in the making and tens of millions of dollars.
Okay, so Charles, we hear what Trust Science is doing. How does that just focus in on your business and how you've changed your processes, if at all, based on what they and their, and I hate to say they're our competitors, to what they do?
It helps us to support our growth. When you look at auto finance, we're now the top specialty non-prime lender, so we're not a bank. So with innovation, we were able to catch up on banks, and now those competitive advantages diminish over time. So by using Fintech, we were able to catch up on that. When I look at the growth we had, we more than tripled the portfolio in 5 years, but the number of employees stayed the same. So for us, that was the big game changer. When we have Flings, like we have Flings earlier today, talk about what they bring on the table. that kind of fintech, that kind of technology help us to get competitive.
And Ilya, is that your experience as well?
Absolutely. I mean, speed and efficiency, you can summarize it that quickly. It's about processing more data cheaper. It's about processing more data faster and delivering a product that our customers are dealers. So as long as we can deliver a product that's accurate and quick to them, that's what they want. So that's what fintech allows us to do.
So I'm an insolvency lawyer at times as well. Does the decision-making process reduce my need because they get the decisions better than they were 5 years ago, 10 years ago?
That's a loaded question. I'll answer it that way. I think that what technology does from an adjudication perspective, it removes the human element. It removes emotions, it removes processing time, it removes all the elements that are not really objective. In terms of, insolvencies or not, a macroeconomic environment has a lot to do with that, and I think a lot more than any decisions that we'll ever make. So, it's an objective view of a person's situation, point in time. And even though things change as that loan is on our books, that decision is ultimately what forms the basis for that relationship.
And Evan, we had the discussion earlier and you were saying your success rate or your accuracy rate has improved over time. Do you see that getting even better, or have you sort of reached a ceiling based on current trends?
So take this the right way. I have an acronym, IADS. It's about the data, stupid. The fact of, you can talk AI and fintech till you're blue in the face, but what's become more available now that didn't exist as recently as 3 or 5 years ago, let alone 10 years ago, when you're dealing in the current world, these things didn't exist as recently as themselves 20 years ago. So the kinds and the amount of data that you can get in real time, if you can operationalize it in the moment when a decision needs to be made, and I'm stressing decision, I'm not talking about rendering scores or any point solutions. When you buy low, sell high, starts with the leads. It starts with then verifying data that is being self-represented. It goes through to these gentlemen's businesses, servicing and collections. It then, for an asset-light lender, you have to originator, you're packaging up an ABS, and then you're having conversations with the hedge funds. Everything I've just said has aspects of intelligence and data being required. And so, yes, it's absolutely getting better and better and smarter. And if it is a legitimate learning system, and it's got legitimately figured out how to access alternative data in real time, it can't but help to get smarter. I had investors who were talking about shutting the company down when COVID hit. We had just come into a legally compliant way, being we call it Credit Bureau Plus across North America, 4th fastest growing fintech in the Western Hemisphere, and they're saying, we're going to shut it down because of COVID. I said, guys, I just spent double digits of millions of dollars in years building this platform. COVID or disruption or chaos teaches a system. It teaches the reason that the people on this stage and others are harnessing fintech is because the systems are taking advantage and learning from all of what's gone on. And so I say, if you lock a baby in a dark room, it's not going to learn anything. You open the door and it touches a hot stove, COVID, bad. Goes and plays with a fluffy puppy, that's dollars being wired into your bank account through CERB, good. Different behaviors. And what happens next? Well, now interest rates and inflation. Fintech the world over is gorging on a massive multi-billions of people experiment that would be unethical to have conducted artificially. So it's getting smarter and smarter to the point that I think it should be spooky. I know Halloween was yesterday. You should all be worried about this in a sense that it's that powerful.
Yeah, I'm going to play devil's advocate on that. I sat in so many different lectures over the last decades, how everything is getting better. and then we go into a recession. So I will be curious when we have this summit next year to find out whether the accuracy level is in fact what we believe. I'm skeptic. So Charles, when we're talking about seeing fintechs in your industry, and this is more Ilja and to Charles, they're potential competitors of yours because they offer different not processes, they offer the same type of product that you're offering. Do you see them, I mean, I know you see yourself as a fintech, but do you see young companies coming up who are going to take some of the market share that you currently hold?
I don't see us as a fintech, and I don't see them as a competitor. For me, what is the biggest challenge? We have to deal with the dealership, and the dealership are tough to change. The way they do business, you mentioned earlier about the turnaround time. We're at the stage right now that if we go faster in the turnaround time, it won't make a big change on the business level because the dealers are satisfied with the current model. For me, the way I look at the fintech, they will help us to bring a new business model, to change the habits. If I look at the next 5 years, we can continue with that business model. But right now, if you look at all the sales, all of the car sales, the journey always starts online. If you want a new car, you go to the OEM website, you go to the dealership website. You want a used car, you go to Kijiji, Auto Trader, Marketplace, name it. But the thing that we don't see right now is those sales closing online. And that's the part that's going to come. I'm quite confident on that one. And that's why I see the fintech helping lenders, like more traditional lenders like us, getting there.
Ilja?
Yeah, I agree. I don't think I see fintechs as competitors. I see them as vendors that try to improve certain parts of what we do. And I think there's a really big difference between different fintech companies. A lot of them got funded in 2021 when capital was abound and was free. But frankly speaking, I don't think all of them are going to make it because some of them are better than others. And so when I think about what they bring to the table, they need to find their place in that, in the workflow that exists in auto finance in Canada. It's frankly a workflow that is antiquated, and I'll be the first to say that it needs to be revolutionized, as this panel is about. But it's the way fintechs approach that issue which is key. If they have enough runway and they have a better mousetrap that can actually find users, that's great. We'll work with them all day long. I just hope that more and more of them approach it that way.
So what you're saying, I think, is that they're taking the old model and trying to put better pavement on it, to use that expression, as opposed to finding a new highway entirely.
Yeah, I would say that's accurate. I think they're trying to pave parts of the road, not even all of it, right? And ultimately, it's about who uses that particular technology and how it's being used. Again, there are too many in the market today. There's going to be consolidation in the fintech space, there's no doubt about it. Hopefully, the better technologies will prevail. But what I see happening is, those specific fintech technologies will get absorbed into the larger systems that we as parts of the auto lending environment use. So it's either the DMS systems that the dealers use or the LOS systems that we use. The fintech innovation will become part of it eventually.
Okay, I'm going to change tracks, and this is a question I didn't even discuss with you before. I told you that was going to happen. What's the biggest challenge you see in the auto finance industry in the next 3 to 6 years? Is it the direct-to-customer that you see the OEMs doing? Is it something else? Are there legislative changes that you see coming down the pike that is going to make your life more miserable? Or, in fact, is it possible it will make your life better? That was a joke. I've never known the legislative change.
I can go first on that one. So for me, as a specialty non-prime lender, Right now, our business model is based on dealership in FNI. And I see the shift moving from that power to the consumer. So how as a specialty non-prime lender, we relevant to the consumer, we there for them, and we can compete against with the big players there. So for me, that's the biggest challenge I see moving forward is we're going to change completely the shift of power to the consumer, and that will have an impact.
Ilja?
Well, I would add transparency to it. I think that a lot of different fintechs are working on delivering more transparency to the consumer. I would add speed to it because again, right now the way the consumer ultimately gets to a lender is long, antiquated, and non-efficient. And so with new technologies emerging, I think that'll change. It'll become a lot better, a lot faster. And the last thing I would say is, it's not that the dealer will go away. I think dealers will just change the way they do business. And that's something that we really want to see because it has to become more efficient. It has to become more efficient for us as lenders, but also for them as dealers. Because when it's not efficient, it's just burning cashes. That's not a good thing.
Yeah, I believe the CLA actually did a white paper on what they saw as the future of the auto dealer. I think it was 2 years ago, if my memory serves me correctly, and it was going through the matters that you have just discussed, which was interesting. So let's move it then to the next topic. Do you see that there are barriers for you being able to use technology as efficiently as you could? Do you see, I'm going to go back because I'm a lawyer, are there legislative problems such as dealers not being able to use e-contracts, et cetera, that you see as problematic in making the transaction cheaper and faster than it otherwise would? And all three of you, because it hits all three of your areas. Privacy as well.
I'm happy to start. So I think the biggest challenge is how those technologies can be integrated into the existing workflow. So there's only a few, I would say, main systems that are being used by pretty much all the players in auto lending in Canada. And if a new technology is not part of that environment, it's very difficult to convince either the dealer or the lender to use it. So I would say that's probably the biggest challenge for them to get integrated into a process that is already in existence. And then in terms of legislative changes, we know how slow those come along. So I think we'll have plenty of time to adopt if and when they do.
Evan?
Our customers are lenders, non-prime and subprime lenders, and so the main answer to your question for me is what affects them, and that would be rate caps, and we've seen that in the U.S. a lot, and here, in an environment where interest rates have, the prime rate's been 10x over what it was 2 years ago. That kind of change it can be harmful to the ultimate customer, which is the consumer borrower. So my customer's customer, who is in need of that kind of help or support or choice, is in a real bind if you put subprime lenders out of business. And so I see that from our business itself more directly. It's just the legislation around AI. It's the executive order in the US that just came out the other day, earlier this week, around AI. Trust Science prides itself on being proactive and working with the regulators, so we're compliant in all jurisdictions that we operate. We, in fact, engage them and deliver white papers or workshops to the regulators about the impact of this new technology that's coming, so that they're, hopefully they don't do any damage by, when they do moving in the wrong direction or in a way that's doesn't make sense with the technology.
Charles?
So for me, I would say I see two big challenges in the future. Even mentioned it. It's one thing to get data, but we need to have efficient data and get organized. And right now we get buried by data. So that's the biggest challenge. It's how to use them, okay? And that would be the first one. And the second one for me is, and nothing against a fintech company, every week I'm getting a call from a fintech company for a presentation, if not two. And it's how to pick them, how can you choose them, and like Ilja said, is they're not all gonna survive. They all bring something different. So for us as a lender, is to pick the right one and which one we want to partner with. That's a challenge in the future. Like the volume is there.
This is really off topic, so I'm going to go, sorry. How do you choose between what are the key factors that you're looking at when you may have a presentation by two companies who are providing similar services? What are the key factors that you're looking at in making that who you're going to go with, if any? Is it the management? Is it their financial stability? Do they give you extra money?
Yeah, I mean, ultimately, of course, it's all about ROI, right? But for us, I would say the most important aspects would be ease of use, reliability. Those two would be paramount because, again, our business is built on delivering a product to the dealers as fast and as accurate as possible. So those two factors would be my top two.
Charles?
Same here.
Let me just go down a different path. Is there something that you would like to see built that has not yet been built? Would it be a better collections process, a better KYC process? Is there something out there that you haven't seen yet that you think of and you go, wouldn't it be nice?
So that I don't, I'll get my co-panelists off the hook so that they don't have to say it, but I think a lot of people in the auto industry might like that dealer track gets improved either organically or by force or something else happens. I think that's one.
No, that's futuristic. I mean, that's...
I really wasn't actually going there, but in fact, I mean, I have heard a few people mention that over time. I'm not sure from where.
Yeah, I mean, I agree. I think it would be great to have an alternative. I think we as lenders would welcome an alternative, and dealers would welcome an alternative too. I don't know if the guys are in the audience, I know some people that are working on it. Hopefully they're successful.
What about on the collection side? I mean, you're lenders and you put out the money, but you often want to get it back, generally on time. Are there ways that we could improve collections through a fintech solution that you don't currently see, or have you found some really efficient techniques of doing that?
There's been actually quite a bit of innovation around collections, and it's all about how you contact the customer faster, how you offer them ease of use in terms of making up that payment, different sort of payment rails and whatnot. So it's actually been good to see that people are working on solutions in that space. And I'm sure there's more to come. As the world gets more and more connected, I think there'll be new technologies that will emerge there as well.
Charles?
One of the comments during the AY panel was the human touch with that technology. So for me, I truly believe in collection, the human touch is still important. But like Ilja mentioned, so many improvement has been done now about the timing you need to call the consumer, when to collect, and so on. So we can leverage those technology, but the human touch would be there at the end of the day for sure.
So now let's go down that path one more. What about in the circumstance of an absolute default in the repossession? Do you see solutions out there that have assisted you in this, or do you feel that we're still back where we were 5 or 10 years ago at the final part of the process?
I'm not gonna... I hope there's no regulators watching this, but I think there hasn't been much change, honestly, and we're experiencing issues that I don't think we could have even sort of could be part of a risk matrix 5-6 years ago. You know, there's a shortage of bailiffs in Canada. You know, who would have thought that would be an issue? So if we have to repossess cars, we actually pay premiums now to get our cars first. Sorry, Charles. But those are things that could be helped through regulatory channels, but I don't think they're on anybody's priority list. So I don't know that that's going to change anytime soon.
Charles?
I don't think I have anything to add on that one. Like the biggest part with that, with repossession, is the physical aspect, is the car by itself. That's the biggest problem. So the improvement in that area are slow, like Ilja mentioned, and so I don't see a lot of changes in the coming years on that end.
And I know there's a lot of panels right now on fraud, so I'm not going to go down that path because I see that as a huge area. One area that has actually crept up recently with a number of our clients is and this goes to auto lending a fair amount, is repairers who have a super priority lien over the finance company, and you getting information. Has a fintech come to you yet with a solution of how that data could be shared? Or Evan, this may fall into your area as well. Has anyone come up and said, when a repair lien is issued, how you as lender find out about it? Wow, wouldn't that be a good business? Anyone want to? It's actually really easy. You go to the, but would that be helpful if you knew that? Like if you found out there's a $5,000 repair on your $8,000 asset?
Absolutely, it would be. I don't think anybody has built that, and I think that our salary legislation in Canada is outdated, to say the least. I think there is some work required, and I'm sure the CLA can play a role in that as well. If any fintechs are listening, here's a product idea for you. Figure out a way to have a database on insurance. Because one of the things that we as auto lenders struggle with is identifying and understanding when clients lose their insurance, which of course is a big risk. So if somebody can solution that, both at the point of origination of a loan where insurance is actually being issued, and then at the point where insurance is being either canceled or is under duress or whatnot, that would be a fantastic product. I can guarantee you'll have a lot of customers in a flash.
So in the last 30 seconds, we now realize that there is a business out there for an innovative entrepreneurial company. Two businesses, one on repairs and how the lender can find out, and two on the insurance side. So we have had value out of this discussion in any event. I want to thank the three panelists. This was really informative and really enjoyable and really fun. Thank you so much.
Thank you.